This is All India Radio. In the weekly program Current Affairs, now we bring you a discussion on rapid growth in India's manufacturing and exports. The participants are Dr. Ranjeet Mehta and Gopal Krishna Agarwal, Economic Analyst, and the moderator is S. RANGABASIYAM, AIR Correspondent.
To discuss today's topic of rapid growth in India's manufacturing and exports sector, I welcome Dr. Ranjeet Mehta and Mr. Gopal Krishna Agarwal in the studios for this discussion.
Thank you very much.
Thank you very much.
Dr. Mehta, to talk about India's manufacturing and export growth, let me begin with the manufacturing sector. The Purchasing Managers Index or PMI for manufacturing for the month of November has come at 55.7, which is up from 55.3 in the previous month and has been consistently up in the last couple of months. Can we take this as a clinching evidence that the Indian economy is doing well? And more specifically, the manufacturing sector is really hale and hearty.
If you look at it, after COVID, we have seen that there has been demand resilience boosted growth. So with firms noting the quickest rise in the new orders and output for around 3 months, I think that we cannot say that this is the proof that Indian economy is doing well. Definitely, it is a very positive sign, and also the kind of push the government of India has given the manufacturing sector in past around 2-3 years. Those fruits are, in fact, we are reaping these fruits right now.
Mr. Agarwal, the manufacturing PMI, that is the Purchasing Managers Index for the month of November, has seen a figure of 55.7, and this has risen from 55.3 in the previous month, and it's been consistently up for the last 3 months. How do you see the numbers?
If you look into the PMI index, the post-COVID, it has been in the expansionary mode basically, and if also compare it with the services sector, you will find that the services sector PMI has also increased. So, in spite of recession at the global level, the manufacturing sector in India is in an expansionary mode rising. And if you also look into the FICCI's report on survey, it also says that 70% of the surveyed industries has shown that they are having capacity utilization above 70%. So, many of the manufacturing sector are at a good level of capacity utilization. They have expansion plans, and the government is also working to support the manufacturing sector through production link incentives and other spending on the infrastructure, reducing the cost of logistics for transportation of raw material and finished goods, and also reserving certain manufacturing of the defense equipment domestically, procurement of defense requirement domestically. So these all are helping the economy, particularly manufacturing sector, to revive, and government has good target that in near future will increase the contribution of the manufacturing sector to GDP from 15% to 25%.
Right.
So there has been a concentrated effort on the part of government to support manufacturing, give them all kind of ease of doing business, whether availability of land, permissions, availability of power, and so that the manufacturing sector improves.
Dr. Mehta, recently we got the GDP numbers, 6.3% for the second quarter of financial year ending 2023. This kind of a manufacturing uptick, and even in other sectors, the economy is doing well. Can we expect, in the next 2 quarters, Q3 and Q4, that the impetus on manufacturing and the growth in manufacturing will have a reflection in the GDP figures as well?
You see, India's exports, there has been a tremendous growth over the past 2 years. Now, India has already reached around 418 billion manufacturing exports in the fiscal year 2022. Actually, India contributes around 3.1% to the GDP these exports contribute. Now, with the kind of schemes like such as PLI, the government has announced in 13 sectors, this is definitely going to give a push to the manufacturing sector. However, as far as the economy is concerned, there are many geopolitical issues in the world right now, such as, Ukraine and Russia conflict. So it has given pressure to the energy prices, you can say, in Europe and other countries. Even India imports around 80% of crude oil for its consumption. So inflation is definitely, I would say, worrying point here. Otherwise, our economy is very resilient, and it's still the fastest growing economy in the world.
That's true. And now I'll put the same question to Mr. Agarwal. Recently, we had the GDP figures for the second quarter of this financial year, which came at 6.3%. Do you think this buoyancy in manufacturing will also have a reflection in the overall GDP figures in the next 2 quarters?
Definitely, if the manufacturing sector increases, then the GDP figure will also increase. But our focus on the manufacturing sector is that it creates lot of employment. And particularly, our focus is on MSME sector, which has a force multiplier with regard to creating employment opportunities. Because per capita labor output is higher in MSME sector. So we are focusing our manufacturing sector, particularly MSME sectors, and value addition at the agriculture sector is also being focused by these schemes like one district, one product, and support to the cooperative sector, farmer producer organizations. All these are creating good opportunities in the rural economy also. Government is focusing that more than 50-60% of our population resides in the rural areas, and if the activity shifts merely from the urban areas to the rural areas, it will give a better economic growth. So focus on the MSME sector, focus on the rural economy, focus on the agriculture sector, particularly value addition, defense sector and infrastructure sector. These will all help into creating a higher GDP and at the same time ease of doing business and demand in the economy.
But Dr. Mehta, let me bring in the global perspective as well. Everywhere it's being spoken about that, there is a clear-cut global slowdown. But do you think that, this global slowdown will, sooner or later catch up with India as well? Is there a real apprehension, real fear about this?
Global slowdown, definitely it will have some impact on Indian economy. But India is a huge market with 1.4 billion people. So we have a large consuming population here in India. And Indian economy is very, very resilient. So therefore, though this geopolitical issues and other economies, when they are slowing down like Europe and US, so in that case, India will definitely have the impact of that global slowdown. But the kind of push the government of India has given to the manufacturing sector, and we can see that India is attracting a lot of foreign direct investment right now. So therefore, we are very, very confident and positive on Indian economy. And same way, we have seen the statements of various economists, world leaders, that India remains the most attractive destination in the world for the investments.
And now I'll put the same question to Mr. Agarwal. At this point, I also want to bring in the global perspective. Everyone globally is talking about perceptible slowdown in the economy, whether it is Europe, America or elsewhere. Do you think there's a real apprehension, a fear that this global slowdown could also, catch up with India sooner or later and probably, try to bring down our growth as well?
There is really a big challenge at the global level post-pandemic. That is about recession in many countries, particularly Europe, China and America. Those economies are slowing down. And second is the inflation. US is reeling down under very high inflation. Europe is having problem with regard to energy, gas supply, energy supply. And China is having its own problem with regard to its post-pandemic lockdown. But these challenges are creating opportunity for India. One thing is China had a huge manufacturing base and it was providing manufacturing facility to the global industries. And the slowdown in China due to lockdown is creating one opportunity for Indian manufacturing to increase their production and integrate more into the global and regional supply chain. Second is that there is a perception at the global level that if they concentrate their manufacturing in one country, there is higher risk involved. That at point of time there are certain problems in that country, the whole supply chain becomes restricted. So they want to shift their manufacturing to other countries, and India is very well poised because of democracy, good infrastructure, large market demand domestically, and a stable government, and the business and industry's favorable policies, and we have good natural resources also. So this is creating an opportunity, and even our energy problem, etc., is not that acute what Europe is facing because of its policy with regard to Russia and Ukraine oil and gas imports.
Yeah.
We are looking into our domestic energy need and in the national interest also. So our policy of oil and gas imports from Russia, Ukraine has also benefited our industries. And we are also not facing that much inflationary pressure which US is facing. It is facing an inflationary pressure higher than almost 40 years. So Europe, energy crisis, US high inflation, and China's lockdown. These three global challenges are in a way creating opportunities for India's manufacturing. So I see those challenges of recession, inflation, etc. as an opportunity for Indian manufacturing to expand their capacity, integrate their manufacturing to global and regional supply chain, and take the benefit of product PLI, production link incentives, etc. And we are seeing that several sectors like automobiles, pharmaceutical, financial, technological services, other such industries are having benefit from their integration. So I think these challenges are there, but India is not that much in a bad situation.
Dr. Mehta, let's bring in this aspect of initiatives, schemes and impetus which has been given by the government of India. Say, for example, Make in India, or maybe the production-linked incentive schemes in particular subsegments of the manufacturing sector. Do you think all these will go a long way in making India, as we envision, as we see that in years to come, India will become a manufacturing hub, not only for domestic consumption but for the entire world?
Definitely. Prime Minister Shri Narendra Modi ji had launched a Make in India in September 2014. And ever since then, there have been a lot of efforts and push from Government of India to make sure that India becomes the manufacturing hub of the world. So in the same direction, the government has launched this PLI incentive scheme, which is around 1.97 lakh crore over the next 5 years. And it covers 13 sectors such as telecom, electronics, auto parts, or batteries, pharmaceutical drugs, solar energy components, etc. So this scheme is also is in tune with Government of India's vision of Atmanirbhar Bharat. Therefore, many companies from the world, they are attracted to take the advantage of this scheme, and our states have also become very proactive, because at the end of the day, any manufacturing or any company that comes has to set up their factories in the states. Therefore, we have seen that states like UP, they have set a target of $1 trillion economy in Uttar Pradesh, which is having around one fourth of India's population. So many other states have also come forward. I think that the kind of buoyancy that we have seen in Indian market, I'm sure that these kind of schemes like PLI have really, given an impetus, and I'm sure that it will boost the manufacturing sector in India. Apart from that, many Indian companies also acquiring or getting into joint venture in abroad, in foreign destinations to manufacture with the foreign collaborations so that they can export to the world apart from this. Even in manufacturing sector, we are getting a lot of FDI due to these schemes. We are very confident that this PLI schemes and many other schemes that India has given will definitely boost the manufacturing.
Dr. Mehta, with respect to, manufacturing for exporting, there are also challenges. Say, for example, lower labor costs. One of the major competitors is China and maybe, other Asian countries. Say, for example, Bangladesh is a big competitor in the ready-made garment segment and textile segment, predominantly because of lower labor costs there. Don't you think that would still remain to be a big challenge for us? Because, beyond a limit, we cannot lower the labor cost in India.
You're absolutely right, Mr. RANGABASIYAM. Bangladesh has really been doing well as far as garment exports is concerned. And labor cost, though we still remain cheaper labor market in the world, the problem to some extent is with the labor laws. And Indian government has been working on labor laws for a very long time, and they have streamlined many processes in this direction. But the states also have to come up with very encouraging labor laws for the industry. And secondly, I think as far as export is concerned, we have to make our supply chain seamless, and logistic cost in India is around 15 to 16%. However, if we see in developed countries, it is around 8 to 9%. And government has already addressed this issue of logistic cost by introducing the Gati Shakti scheme, which is a nodal body which will be, in fact, coordinating with all the various ministries to make sure that there is seamless supply chain in our country and logistic cost comes down, and there has to be an integrated, multi-modal transport system where we need to connect our ports with the hinterland, with the railways, and also with waterways. Yeah. And there has been a lot of work in this direction, especially the logistic cost will also come down if we use more of waterways. And government has already announced 11 rivers as national waterways, and in some places there has been a trade through, or there has been consignments have been going through the waterways in Ganges. So I think that all these schemes, especially with the introduction of Gati Shakti, we expect that the logistic cost in India will come down sharply.
Mr. Agarwal, you spoke about, government support and initiatives. We all know about the Make in India impetus and also the production-linked incentive scheme extended to the manufacturing sector, certain sectors of manufacturing. Do you think all these initiatives will go a long way in making India the manufacturing hub for the entire world? That India is the manufacturing hub, the place where it manufactures not only for the country but for the entire world?
The Prime Minister's call for vocal for local, and the second is our opportunities for global opportunities in Make in India and Make for India have a two aspect to it. One thing is that we have a big domestic market which can create demand for the manufacturing. That is one part of it. Second is that we integrate our manufacturing to the global supply chain and regional supply chain. Therefore, our focus on free trade agreement with countries like Europe, like US, with Australia and UAE, Gulf countries, these are the countries which have huge market demand and they are consumer of huge manufacturing sector products. So, if we have free trade agreement with these countries, where our government is working on, we will surely will be benefited from this approach of Atmanirbhar Bharat, Make in India, Vocal for Local, together with demand in the domestic market and integration of our manufacturing into global and regional supply chain is going to benefit the manufacturing sector. And at the same time, government is spending huge amount on the infrastructure. Gati Shakti is a very important initiative of the government where more than around 250 projects have been identified, where infrastructure is being developed so that the transportation of raw material and the finished good is smoothened, the cost is reduced. At the same time, our logistic cost is also reduced. So it will also create demand in the market. So Gati Shakti, Digital India, PLI, then this industrial corridors, ODOP, all these important initiatives of the government are helping the manufacturing sector. And second part of whole growth story is that we are focusing on renewable energy, whether it is green hydrogen or ethanol blending, so that our import dependency on crude oil is reduced, and which is a big burden on our import bill, at the same time high cost of petrol and diesel. So if in the future our renewable energy initiative increases, so we will be benefited out of that also.
Dr. Mehta, let's talk about the automobile sector. Passenger car sales have skyrocketed. 31% growth for the month of November, and even in October it was a very healthy growth. Commercial vehicles have moved up. In that automobile sector, the subsegment of electric vehicles, EVs, have shown a wonderful growth, consistently selling more than 1 lakh units for the last 6-7 months. Do you see this particular, this kind of a massive growth in auto sector as a leading indicator of GDP growth in the country?
Definitely, auto sector is very, very important sector for our economy, and it has been contributing a lot. And recent times we have seen that many automakers, they have a waiting of around 8 to 9 months in certain segments of cars. And there has been manufacturing push because engineering goods have sharply, even the exports of engineering goods have increased sharply. As you rightly said, as far as the EV space, it is a growing space as India has committed around a reduction in carbon footprints by 2030. Therefore, introduction of EV is extremely important, and Indian government has really pushed, and there are various schemes. In PLI also there is a scheme for batteries. So when you look at it, I think the EV is the future, because the way there has been impact on our climate, so we have to take the steps towards the climate mitigation. So in this direction, the transportation sector, which is also one of the big contributors to the climate change, so this can be reduced only by introduction of EVs and the kind of charging stations infrastructure that is coming. So with this, we hope that this space is going to catch up. This is a new age business which is coming in Indian market in automobile sector. All the big top Indian automobile manufacturers have already committed investments in EV sector, and we hope to see, and we are sure to see, many foreign investors also taking interest in this domain in India, because India is a very promising market with large base of consumers. Therefore, this sector is definitely going to grow in future and will contribute significantly to the Indian GDP.
Mr. Agarwal, let's also, talk about foreign trade and more specifically exports. Although in the month of October it has contracted by almost 17%, but in the previous months, it has seen a fairly good growth of 9-10%, and in some of the months maybe less, around 5-6%. What all factors do you think are conducive for, growth in the export segment?
The factors which will help our growth sector is, one thing is our export is increasing, but the problem is that the cost of import is increasing higher than the cost value of export. That is because the global oil prices and our dependence mostly on import for the oil is increasing our import bill. So, as I said earlier, that if we, as the government is focusing on reducing our import on energy bill, that will in itself will help our balance of trade payment. And second conducive factor is that we have to sign more and more free trade agreements and integrate our domestic manufacturing sector to regional and global supply chains. earlier our FTA with this ASEAN countries did not benefit because they flooded our domestic market with their products. That was not conducive, so we have done away with FTAs with ASEAN countries and we are focusing on FTA with Europe and American countries.
Yeah. And do you think the weakening of the rupee, although at times we call it a double-edged sword, but as far as exports are concerned, a weak rupee is much better and would help increase exports?
The thing is that exchange of payment is a very complex matter. Many factors affect the exchange of payment. You cannot identify one factor that depreciating rupee will benefit the trade and industry. It is the RBI which has to balance many factors, and then it has to see the value of rupee in comparison to other currencies also. So when our rupee is depreciating in comparison with dollar, but if you see that our rupee in comparison to other currencies is not depreciating that much that other currencies are depreciating with respect to dollar. So these all factors have to be taken into consideration, which impact remittances, which impact foreign direct investments, which impact money FII flows, our import and export. So RBI takes into cognizance all these factors and balances the rupee valuation. So there cannot be a single point valuation, single point idea that depreciating rupee will help or appreciating will help. But all these factors are balancing factors of our balance of payment, and RBI is taking care of all these factors.
Dr. Mehta, with respect to foreign trade and more specifically exports, we have seen the kind of growth which has been there in the last 2 years. The forex scenario, the rupee dollar equation is very important. We have seen how the rupee has weakened in the last couple of months, but as all of us call it a double-edged sword. Can we have a kind of a two-pronged strategy, one for exports and one for imports, so that the rupee dollar equation doesn't impact us negatively? Maybe, as we are doing with or initiating with Russia, having Vostro accounts or rupee-based trading where we import and pay in Indian rupees. And also for our imports, we look at non-dollar denominated destinations or markets for our imports so that, the outgo of foreign exchange is minimized.
You are absolutely right, Mr. Rangabasiyam. Like the arrangement, rupee payment arrangement, the government of India is working with many countries, and one such country is Russia.
Yeah.
So this kind of strategy can be done because most of our imports in oil, like we import around 80% of our necessity of oil from abroad. So therefore, it is a big contributor to our big chunk of money, dollar goes in buying these products. So now, as you rightly said, if we do agreements and make rupee to import the products or the petroleum products from these countries, then that will be a very good strategy. As far as rupee and dollar equation is concerned, if you see, Indian rupee has not depreciated that much. If you compare with other economies in the world, so we are still a very strong rupee if you just compare it to the other economy. Therefore, even I must compliment RBI. They had taken a very proactive approach to make sure that rupee does not come down so much. But I think that when rupee comes down, then it really increases the exports, but it makes our imports very, very expensive. So it is, as you rightly said, double-edged sword. But the kind of arrangement you suggested, it is definitely a very good thought and a step the government is definitely taking in this direction. And in very near future, we will deal with this and come out with a good solution to make sure that we don't have to spend so much of dollar in importing oil.
On that note, it's time to wind up this discussion. Dr. Mehta and Mr. Agarwal, thank you so much for joining us in this discussion.
Thank you very much.
Thank you very much.
You were listening to a discussion on rapid growth in India's manufacturing and exports. The participants were Dr. Ranjeet Mehta and Gopal Krishna Agarwal, Economic Analyst, and moderator was S. RANGABASIYAM, AIR Correspondent. This program was produced and presented by the News Services Division of All India Radio.